Hello everyone, petar.jacimovic here from whitecoveanalysis.com. I want to post the update on the GBP and the reasons why I entered today's sell on the GBP. If you follow my work, if you follow my journal, the Forex Factory Trade Art of Trading by Petar Serbia, I posted there that I sold the GBP around it's around the 1.4520-25 area. I will show you and I will explain the reasons why I establish positions and how you use the volume price action analysis to read that liquidity and try to actually follow the smart money or the syndicate traders. So basically what happened, the smart money usually when I trade also for investors and usually the hedge fund traders, we pretty much await the large high impact news releases, something like interest rate decision, which is the strongest one, and then employment change for specific country, and then there is also few others large high impact news, but it's usually the most important are unemployment change in the country, and then interest rate decisions. Now I want to speak. So what we got today we got a non-farm employment change. This is exactly the first minute of that. This bar here is the first minute of the news. When the news came out, it came out 160k. The actual was 160k. The forecasted was around 200k. So it came out like 40k lower, and that should be, if you think like this, it should be bad for dollar, since it came out lower than expected, 40k lower. And it was in the first minute or 2 minutes, price went actually 35 pips in the first minute bar, and then the next bar actually stopped in the same area where it was the first minute high. So the first reaction from the crowd was buying, so they bought because of the news actually came out very bad for the US, if you think on that way. But that was just first minute. Then after the few minutes, I marked this like ABC because this is the critical for me. The next minute, so the second minute after the release. So let's start with this first. Letter A. We got widespread of the bar, 33 pips, range of the bar, ultra high volume. It was also ultra high on the futures market, so it was a volume spike. So the climatic actions. But the very important rule in the volume spread analysis and actually in the price action analysis is where the bar closed. The bar closed in the middle. So just always ask myself how the bar can close in the middle in an ultra high volume, so there is a big liquidity there, and how the bar can close in the middle. If there is a real strength from professional traders, from smart money, from the backs from the syndicate traders, bar shouldn't close in the middle. So this is a first major sign of the weakness in the first minute after the release on the non-farm employment change. The very next bar, so some of the traders stepped in and they sold after this bar finishing. Anyway, I need more clues. Usually when I trade, I need to see some more clues when I finally make decision what I will do I actually trade or not. But the next bar is also a high volume bar, so high activity bar. You look at the volume above the average clearly, and the bar closed in the middle again, even lower than the middle. So another confirmation of the weakness, the second minute after the release. Then at the point C is this narrow spread of the bar lower compared to previous two bars. Also volume actually above the average, high volume. So this is like churn bar or the no demand bar in a high volume. So this is a narrow spread of the bar, 5 pips bar. This is a clearly sign that buyers don't have power, and that smart money will sell in this stage because they saw the lack of demand there near the 1.4500, let's say 42. In that third bar confirmed my entry, so I sold there, and I put a stop loss above this. It was at like 30 pips, I guess. if I remember. Yeah, it was like 30 pips. My stop loss area was this stage here, and I sold there. So now I got some questions. Actually, I got one mail today, and there is a mail, and the person asked me why the USD became strong, and the news came out negative. So it came out bad for the US dollar. Now my answer is, because of that, the smart money, they're not care about actually what is written on the actual and forecasted. What they care is they care about the liquidity and the price action and the volume. So the news can be ultra bad for the dollar, but after a few minutes and after the crowd's buying, because as you see, the first minute crowd and most of the traders started to buy, but then the smart money started to sell, you know, into their buying. They got a better price to enter, they waited the news, and they sold. Now the second minute, some seller joined it. The third minute after the release, there is absolutely no improvement for higher price. There is no demand, and then the smart money, the hedge fund traders, and I also took here sell, because it's a very good opportunity. This is what basically you need to wait in the forex market. You know, you wait the large releases, the high impact news, to see the reaction from the crowd and to try to follow the smart money movement later on. Again, one big thing, I never trade before the news. I never trade in the first minute. I need at least a few minutes to see how the price will react after the news. It can be a 10, it can be a 5, 3 minutes, but I don't trade actually the first minute or two. Okay, and never try to predict the news. It's so gambling if you do that, because you never know how the crowd will react and how the smart man will react on the crowd first reaction. Basically, the point is to follow the smart money and to trade according to that. So since there is a major sign of the weakness, news came out bad, 160k versus a 200k forecasted. Price went 30 pips higher, but then lost a lot of power in the next few minutes, and I used this weakness to sell, and you see now, like 10 minutes, I closed my position. I took around 83 pips, almost 1-to-3 ratio. So my risk was 0.5% from my account. I took to 1.5% almost in the 10 minutes. Again, you must be very skilled to understand the market behavior and how to build a high potential setups and where is the best area and the timing to enter. So as you see, after the this was my sell and this is my take profit area. And price, why I closed at this stage, I also got some question about this, because the average daily range on this one particularly, currency pair, average daily range and previous daily range were 86 pips usually. The previous 10 days range is 130 pips. I achieved the daily range at this point here. Also, it's Friday. Today's Friday, and I didn't want to chase. I was happy with 1-3 ratio, and we achieved that daily range, which is the average daily range in the past 10 days. Okay, and it was achieved my 1-3 ratio minimum. I'm usually trying to take 1-3 ratio or at least 1-3 or more. So again, this is the, maybe it's simple, but you must be very strict in your trading and read the volume, follow also the futures market to see what's going on there. Because again, on the forex, I got also some questions on the forum, how you can trade volume, because volume is not centralized on forex and so on. That's true, it's not centralized, but there is a tick volume, which is also very representative indication of the activity. And also there is the same instrument USD on the futures market, which is very big market, and that market is centralized, so you can combine both of them and actually have the very big clue about what's going on with activity on the specific currency pair. So again, this was the explanation why I took position, why I closed position, um, and basically that's the job of every professional trader to um, in my opinion, I also I'm in touch with also some hedge fund traders. We pretty much most of them, they await the big liquidity time, and that time is when the big news are about to happen and when there is a big news release. They don't trade. Basically, I also avoid to trade when there is no big news day on the market, because liquidity is the key. Remember that. Without liquidity, every setup, if there is no liquidity, it's risky. Looks risky. You know, you never know if you trade on the low liquidity when there is no too much big players on the market. Basically, everything you enter can be manipulated easily by the also by the market makers mostly, because they manipulate the low liquidity markets. Okay, so there is a group of the traders, the market makers, which use the low liquidity to basically hit your stop loss orders, and that's absolutely like that on the forex market. Why they can do that? So I also got a question about this, since I want to explain this part. So how can some banks, for example, or some big players, how they can manipulate the market, which is extremely big, how they can impact the market? This is the answer. They can manipulate the market if the market is not liquid enough. That's it. Okay, so if the market is not liquid, with the big money there on that market, they can move for themselves, pretty much you know, hit the stop loss orders, and where you located the most of the stop loss orders. They can read that. They know. They just go there, hit your stop loss orders, and then continue the normal. So they can absolutely step in. So the market makers can step in when they see the low liquid market, and when they see that there is a lot of traders from the public, and the market is low liquid, so there is no big players, but there is a crowd there involved. They can do this because, you know, at the end of the day, market always going upward or downward because of the supply and demand, and because of the power of supply and power of demand. That's it. So the lower the supply demand, the more supply we got, the price will go lower. The more demand we got, the price will go higher. In the end of the day, if you want the price to go lower, it must be a lot of sell orders, a lot of big positions there, all around the world, from the banks and the crowd and so on. If you want some movement like this, for example, GBP USD, okay. So basically, that's I wanted to show you and explain you about that point. There is a different things if you want to trade, like to do like carry trades or long-term trades. That's fine, you know, to do the carry trades and to watch the low interest rates versus the high interest rates countries and trade their currencies and carry trade and take some mid-long-term positions. That's fine. But in my opinion, to be honest, the stock market is better for the long-term trades. Okay, stock market is designed for the long-term runs. So the forex, from the other side, is designed from the speculate. It's pure speculative market, and the high liquidation after the news is the best time to build positions. But of course, you must have the big knowledge, and of course, you must take care about the risk always. Okay, in every setup in my past 8 years of trading, I always had the stop loss predefined. Okay, so you cannot let position unsecured. You always must have stop loss, and then with a low risk, I never risk more than 1%, usually 0.5% in this setup. So with a strict risk control, and with very you must have knowledge about the price action and volume, in my opinion, if you want to seriously to be in this business. If you have that, you can absolutely achieve success. Okay, and that I will teach you all of this in my mentorship program, because I will teach you my daily routine, what I'm observing. I will teach you how to do the intermarket analysis, combine the futures market, stock market, and currencies, how to read the price action to get rate volume. We use this volume spread analysis, Wyckoff analysis. I have also my own view on the volume, so I did some innovation there and so on. So I have my rules and so on. I'm how to use the daily ranges and so on to combine everything to have the to build a high potential setups, you know. So that's it for this video. I hope you enjoyed my explanation, and if you want to follow my work, you can subscribe on YouTube channel, or to follow my journal, The Art of Trading by Petar Serbia, on the Forex Factory. So that's it for this video. Today I took a very good return. I took 2%, and I hope you enjoyed, and that you also took some good pips since I posted this setup before, of course, it happened in the time when I posted on the journal. Bye bye, and see you next week, and hope for a good opportunities in the liquid market next week.